The building that we are contemplating is a mixed-use prototype, where there is a retail component on the ground floor and residences above. We will come to an assumption for the percentage of square footage available for retail use by speaking with our architect and land use counsel. Here on the Sources and Uses Overview tab, we show an illustrative block diagram of how our Sources and Uses of Funds tab is laid out, and have made inputs for some of those items, based on initial estimates for a building of the size and type that we are envisioning. To prevent any circular references, we have stated the equity and mezzanine loan amounts as dollar value inputs. Next, let's move to the Sources and Uses Exercise tab. Before we dive into the projections, let's look up at the box at the top left, which we call the control panel. Take the greater of 0 and the lesser of the subtotal eligible costs minus the sponsor and partner contributions and the total third-party commitment multiplied 1 minus 10% by the market rate price. For the average absolute prices for all three pricing types, which shows the layout of the cash flow tab in our model. Across the top we have our timeline as well as absorption schedules for the residences, parking, and storage units. We must now calculate and deduct our operating expenses and real estate taxes, which might seem out of place considering this is a condominium building, not an apartment building. The reason that we still need to carry these line items, cash flows, so we can get to our levered cash flow, which is the cash flow from and to equity, which will sum to our pre-income tax profit. Congratulations on completing REFM's mixed-use condominium development self-study tutorial.